Hey Fox River family, I wanted to get a video out to you as a couple of people have reached out and asked me some questions about this mortgage deferment chatter that's going around. And I wanted to try to put some of the myth and some of the important questions that you should be asking before you stop making your mortgage payment so that nothing bad happens as an unintended consequence. So let's kind of talk about some of the steps you should take. That first step is really need to determine your real need. Now, it might sound nice to skip some mortgage payments, especially while you're sitting around at home and maybe wondering how work is going to go, or maybe you're not getting your paycheck or your full paycheck, and you might truly have a need. But need is different than just saying, hey, I don't want to, and I'm going to take advantage of the program. So you really need, because of some of the unknowns and some of the reality of consequence, you really need to evaluate if this is something you truly need. Let's talk about that second step. You've determined, hey, yep, I really need that. I've been laid off. I'm not getting my paycheck, and I need to not make my mortgage payment. Then we need to go down this pathway, right? The first thing we need to do is determine who actually owns your loan. Is it owned by Fannie Mae? Is it owned by Freddie Mac? Is it owned by FHA or VA or Ginnie Mae or your USDA loans? Or is it owned by private investor? Now, Fannie Mae and Freddie Mac, they give us a great tool to look up your information and determine if either of them owns your loan. Now, owning your loan is different than who you make your payment to. No one's really making their payment to Fannie Mae. You're making your loan payment to a loan servicer. In my case, that's Lakeview Loan Servicing. So we make our mortgage payment each month to them, and then they go ahead, maybe make my property tax bill payment when it's due, renew my homeowner's insurance. They actually pay the principal and interest payment to the lender, which in my case happens to be Freddie Mac. So we can help you with that process by simply giving you access to the Fannie Mae. It's called a loan lookup tool. You can Google it if you don't want to call me or reach out to me. Or I can certainly, if you send me a message or a text, I can certainly email those links over to you so that you can easily navigate through to determine, do they own your loan or not? Once you determine who owns your loan, it is time to call your loan servicer. Now, when you call your loan servicer, again, this is who you're actually making your payment to. We're going to ask them a lot of questions, right? We want to know everything. Getting into the program simply requires you to say something like, hey, I'm out of work or unable to make my mortgage payment due to the coronavirus situation, and you're automatically in. You're not supposed to need to provide pay stubs or proof of you being laid off or any of those things. But the questions we want to ask are, what happens once you're in the program? Because getting in is very easy. What we need to understand is, what are the consequences and the exit strategy once you're in the program. And I want to give you a couple of examples of things that we know, things that we've actually seen play out. This first example, using just a payment that somebody has of $1,500 a month, kind of shows their loan payment. Their tax bill is included in their monthly payment, as well as their homeowner's insurance bill. So they're paying $1,500 a month. Total is this example. This borrower called their loan servicer, and they were told they could defer or skip their payment for 4 months. So the lender is basically setting aside $1,500 times 4 months, or $6,000. Now, this amount of money just kind of sits over here on the side, and it actually came due in their case. This was like set up in a balloon, right? So here's this $6,000. It was deferred for 4 months, which means on the 5th month, the first day, their payment would start again. So they would owe that $1,500, plus they would owe that $6,000. The total payment that would be due at that time was $7,500. When that individual found that out, they were unable to enter into that program as it was really unwise. There was no guarantee that anything else would happen except that they would need to write a check and make payment for this amount of money. So what would happen if you didn't have that money? Well, the lender could actually start foreclosure immediately because your loan is past due, and that process could embark. So it's really a dangerous option if you don't have that exit strategy to be able to reach out to that. Now, the lender could opt to refinance this balance. If they were going to do that, I'd want you to get that information upfront and in writing and in place. If they're unable to commit to that in writing, where they said that you would automatically qualify and put it again in writing, then this would be a very dangerous option, because the only thing you would know is that this would be due. Now, in the case of Fannie Mae and Freddie Mac, you can actually go to the Consumer Finance Protection Bureau website, and they would tell you that you could defer your payment for up to 6 months initially, plus an additional 6 months if you still have a need after the initial 6 months. Now, they don't really clarify whether or not there'll be some type of a qualification here or not. So it's very important. Today, getting in, just raise your hand and say, I've got a problem. Down here, they may actually require you to provide some proof. They just haven't revealed any thing that we can have to tell you, yes, this is going to be what they look at. Again, here, we need to work with our loan servicer and understand what our options will be. Will they automatically put this 6 months at the end of our loan? Or will I now just have to make my full payment at the end of that 6 months? Meaning that my example here would just be 2 additional months that I would end up due. So now all of a sudden I have $9,000 plus the $1,500 due at the end of 6 months. Or are they willing to, again, in writing, commit to putting that at the end of the loan in advance so that you know for sure what's going to happen? The real fear I have with this is that there will be conditions to qualify who will fit and who will not fit in this adding it to the end of your loan. Will they put a condition that you have to make a certain amount of money, or that if you make too much that they won't accept you into that program? Again, there's really no guidance that I've got at this point to be able to give you with that. So again, very, very concerning, and it all points back to this first question of determining, do you really have a need? Do you just have a desire? Do you have other options? Certainly, we can look at refinancing that loan. Most of my clients who are rewriting their loan today, they're actually going to be able to skip at least 1 month payment. In some cases, we're handling the closing to allow them to skip a current month plus 1. So some clients have skipped their April payment and will skip their May payment, and their first new payment will be due in June. In other cases, we've actually gone through and accessed some of the equity of the home, which added, in one case, about $19,000 in cash back to the homeowner, so that they are able to have kind of that safety net that they felt that they needed as they navigate through here. That was about 6 months of their expenses, so they felt pretty safe at that number. So your situation, very particular to you. Just need to understand what the variables are and how we can best help you navigate them. You can give me a call. My cell phone number is right there. It's a confidential conversation that we'll have. Hope you have a great day. Hope you have a wonderful Easter this Sunday. Wish we could be worshiping together. Talk to you soon. Bye.